Welcome back to Dukascopy TV. Today I'm joined in the studio by Paul Anderson from Raymond James to discuss equities. So Paul, first of all, let's look at precious metal stocks. As we all know, gold has been performing very weakly over the last few months, but UBS has actually upgraded its short-term outlook for gold. What opportunities do you think are there for investors to make money in gold, rare metals and silver stocks?
Okay, so we at Raymond James, we have a forecast for gold for this year, around 1,690 an ounce. And for next year, we have also a target about 1,790. But then longer term, we probably think that gold is probably the price is going to come down unless there's continuation of monetary easing, more uncertainty, but we have a long-term target on gold of 1,200. So on the long-term outlook, I would say we're not as bullish as maybe UBS would be, but as you said, it's a short-term call. In the gold stocks, so obviously all the major producers, Barrick Gold, Newmont, and so on, we've seen their shares come down, and they're at very depressed levels. So it's, I would say, fairly understandable that several houses are doing maybe a short-term call on a rebound. If you look at the technical size of these stocks. What's been affecting a lot of the gold stocks is it's been the cost of labor. There's also been strikes in South Africa and so on, and it's been they've had to increase wages. Even there's been shutdowns of certain gold mines. I would say what could help also gold stocks is obviously if the price of crude, which is used in mining, comes down a bit, it might help also their margins. I would say there's a fairly decent chance of a rebound on some of the majors. I don't think I would be so keen on the junior gold side because I think the majors are not making enough money right now to make acquisitions. So often these smaller companies are targets. As you mentioned, rare earths. The rare earth business, obviously, as you know, it's controlled 95% by the Chinese. There's companies like Molycorp in the US that are doing fairly well, but obviously they've come down too because of the general global slowdown. I think there is opportunities there. One theme that I would look for the long term is countries like Greenland. The Chinese are now in Greenland speculating to find rare earths. US firms are also over there. Greenland, because as you know, ice is melting. There's opportunities for rare earths in other areas like Greenland in the long run. So maybe the Chinese won't have as much as a hold on the market. So I think, it also depends also of the global economy. I mean, if we're going towards a slowdown, the demand for rare earth metals is obviously going to come down.
And now let's look at alternative energy. What type of opportunities are there, do you think, for investors in this sector?
In 2007 in the US, they put this standard for renewable fuels where part of the production of oil, of energy should be made out of biofuel ethanol. Actually, a lot of the companies are way behind the targets that were set up in 2007, and these standards should be valid till 2022, and they should be able to produce 14.7 billion gallons of renewable energy, biomass energy. Actually, they're way behind the target. All the majors have alternative energy divisions, which are in different phases. There are smaller plays in that area, smaller companies like Gevo, like Solarzyme, that are in different stages too. There's a facility in Florida, will be the first second generation facility that will be on the road in a few weeks. But as to make money in this area, you have to be very patient. For these projects take time. There is a huge supply of oil and gas, so the demand for these new energies is fairly low right now. You know, patient investors, yeah, sure, you can make money, but you have to have an horizon of 3 to 5 years. Short term, there is no reason to really get excited. As for wind and solar, the price of solar stocks have collapsed. First Solar being the biggest company in the US, you've seen a collapse, and the subsidies are obviously a big issue, and they obviously with the fiscal problems and so on. There's a lot of uncertainty in that group.
And what about oil? Is Raymond James bearish or bullish in regards to oil prices, and how is this actually going to affect equities?
We downgraded oil in January, and we downgraded oil targets, forecast targets, again in May. And we're bearish, which we're making quite a big call. We have a target for WTI of $65 for next year. And the main reason why we're doing this bearish call is that in the US, thanks to these new technologies of fracking, the extraction of oil and gas is increasing dramatically, or has increased over the years and the years to come. And we think that long run, the United States will be energy oil independent by 2020, and it will have effects on the US dollar. It will have effects on the trade deficit, because for the moment US is consuming 15 billion barrels per day. They import 9 and they produce 6, but in 2-3 years they're going to import far less. Demand is also decreasing because of new cars, hybrid cars, trucks that are going towards gas engines, LNG. So in the long run, we think, we think that oil is going to come down, not because of the state of the global economy, but more because production is increasing quite dramatically.
Now let's look at the world of technology. What is your outlook for technology stocks, and what should investors keep an eye out for?
We're seeing a big demand for data management software. We're seeing a big demand for security, because there's more and more traffic, there's more and more data. Cloud computing is more of a concept, because people talk about cloud computing, but it's more of a concept. It's a very crowded space. Everybody's in cloud computing, so, with a pinch of salt. But data management softwares like Salesforce, like Oracle, still probably have very bright days ahead. There's also what you have to understand, there's big wars going on between Samsung, between Apple for dominance in the mobile space. There's obviously a lot of smaller software companies that are traded, that could be acquired by bigger companies like Google, or if they have the software that would add value to their, and to enhance growth.
Thank you very much, Paul, for sharing your views. And thank you for watching Doireann TV. I will be back on Monday to look at asset management, but for now, have a good weekend.